All right, so everyone's familiar with the term wolf in sheep's clothing. Well, my next guest says that this is a bull market hiding inside a bear market. I want to bring in our Belpointe chief strategist, David Nelson. All right, so David, I mean, I tried to have a little fun with this, but exactly when you say there's a bull market hiding inside a bear market, what do you mean?
Well, the average stock was actually up last quarter. When you look at where, some of the pain was, the equal weighted S&P 500 was actually slightly positive. So the average stock was doing okay. There were some huge winners,
right,
some huge losers in here.
Right.
But there's an ugly truth out there that we're going to have to discuss what really caused the decline.
So, well, let's talk then about where we are right now, because you're saying, so it sounds like, again, we lift up the hood, things look better than you feel.
A lot better.
And we're positioned, really, the rally's position, sector positioning, it looks like we're positioned to do pretty well from here.
We got a taste of what it's going to look like maybe on the other side of this. Yeah, it was a short covering rally to a certain extent. I don't think the war really changed all that much what was really going on underneath the surface, because when you look at the sector performance, energy was the leading sector going into this. It's the leading sector probably coming out of it.
So do you think there'll be a different group, though? Because the last few days, last couple of weeks, we've seen a sort of gone back to, for instance, Mag 7, some of these names. Now, one thing I want to point out to the audience, this is sort of will blow your mind, that the Mag 7 names have contributed more to the decline of this market this year than the 493. Now, we used to complain when they were up, like, oh, it's just seven stocks.
Great when they're up.
Right. So now all of a sudden, Microsoft at down 94 points is more than the other 493 stocks combined. So it seems to me that these names aren't part. They don't have to maybe lead the rally, but they have to be part of a rally, no?
I think some of them will be part of the rally,
okay,
and some of them hit. I mean, Microsoft has some real issues with Copilot. It's also part of the software sector, which has been under siege, but it was 1/3 of the decline, of the entire decline of the market. That's a lot. Not a single Mag 7 stock was up during the quarter.
It's just absolutely amazing to see this, right? NVIDIA, Google, Amazon, they're anchors. They're the anchors now. Before, for 3 years, they were rocket ships. Another thing you talked about is private credit. This is something, too, that's been smoldering for over a year, maybe. It's just now hitting mainstream news. How much more should we be concerned? Because Jamie Dimon is saying, hey, these losses are going to be bigger, much bigger than feared.
There's a word that everybody has to learn. It's called mark-to-market. I live in a mark-to-market world.
Well, I remember in the housing thing, it was mark-to-make-believe.
Right? And to a certain extent, that's true today, because people who own private credit, they don't know whether the print or the mark is 90, maybe it's 40. And that's really what Jamie Dimon is talking about. It was a problem, kind of a cancer within the financial community before this started. It's a semi-liquid investment, and when everybody wants their money out, it gets very illiquid.
The biggest question, though, for investors is there, in your mind, contagion? I had a great chart I was going to use in A block from Apollo, suggesting that it's nowhere near what collateralized debt obligations were.
I would agree with that. Yeah, I mean, if you look at the notional value of private credit and compare it to what we have with mortgages and the housing market as a whole, it's very, very small, but it's still an issue for a lot of financials.
All right, let's talk about those two Mag 7 names you think have upside potential from here. So Google, you're saying if you broke Google up the way they broke up GE, which has been a fantastic move, you've got a search company, a YouTube company, a cloud company, Waymo, DeepMind.
You unlock a lot of value.
But would they ever go down this route? And if they don't go down this route, does the stock just limp along?
It will unlikely go down this route for the following reason, because it is controlled, obviously. The shareholder votes, they just don't have that. So it would have to come from the regulatory structure. The government would have to break them up. But it just shows you how cheaply priced some of these names are.
NVIDIA, listen,
This is a no-brainer. I don't get this. It's simply at the wrong price. It's at the wrong price. You're pricing this cheaper than Colgate. Now, I have to believe the prospects for NVIDIA over the next 5 years are a little better than Colgate, Walmart, and Costco.
And speaking of GE spinning off companies, this has been the diamond. This is they took two.
This is the poster child.
Right. They took two sectors, merged them together, went public, and it just almost hasn't looked back.
Under GE, it was worth nothing. Outside of it, what people get upset about, they talk about the multiple. It gets a tech-like multiple because it has a tech-like balance sheet. No debt. Virtually no debt. When they spun this out, this is an industrial company with virtually no debt. A couple of competitors, they're the leader. Siemens, Mitsubishi Heavy are the other plays in this space, but when it comes to turbines, this is it.
And we're talking, of course, powering these data centers.
You can't live without it.
So then what are you looking for? I'm looking for a close above the 200-day. I think we kind of get that, and we could get some urgency. I think the
A
pendulum
little
could
more than
swing.
that. We gotta live above the 200 days.
Okay, so
I don't
you
want
want
to
us-
just close above
right.
it. I want to live there for a bit.
You want us to get above there, kind of move, but then but the pendulum though starts to swing from this sort of anxiety, panic selling to anxiety about not being in this market.
I think Mike Wilson is right. He said it over Morgan Stanley that we've probably seen the very beginning of this turnaround already starting right now, and obviously the war is not over yet.
Yeah. So let's say the next 24 hours though, we hear something good. You know, President Trump seemed to be alluding that something could happen, something positive could happen. They don't want to, blow everything up. If that is indeed the case, then we speed up our timeline.
Even if something happens and it's a little bit more draconian, there are buyers down there. We've seen that.
Right.
They'll step in at certain levels and buy this market.
All right. Thanks, David.
Hey,
Really appreciate it.
thanks for having me.
Take it.